Jeff, if I remember correctly, at the beginning of the year, and kudos to you if true, you advised your clients to sort of dial back on equities. You didn't say sell everything. You just said kind of go back to your normal allocation because we made a boat ton of money over the last 3 years. So should we if they took that advice, they have cash, do they reinvest it in the stock market right now?
I don't think so, Brian. I'd say, hold your ground. And Jack Bogle once was quoted as saying something like, don't just do something, stand there. And that may sound, not really an exciting piece of wisdom to give people. But we have been looking for, and we have a positive view over the next 12 months on the equity markets. We just think that there are some head fakes out there. There's some churning that's going to happen. And we need to see another data point or two on the inflation front like we've seen over this past week or so. It's gone from horrible to terrible. It probably needs to go from terrible to bad before everyone will be convinced, as well as the Fed, that it's okay to kind of hold in here and pause. And that's what the market really needs to get completely comfortable with before I think it's all clear and you can say buy on this dip that we've had.
Well, there's also seasonality. I know that all of our headlines are like, oh, the market's up on the Fed. I mean, maybe that's a part of it. There's also a lot of repositioning, quant funds, hedge funds, a lot of stuff under the hood. It's easy to say it's inflation, but there's a lot of repositioning. Seasonality tends to be on our side, Jeff. That's not convincing you to be a little more aggressive on the stock front?
Well, I think we need to remember that it was only, maybe about a month ago where inflation surprised 2/10 the other way. And the market was disappointed. And that's what ended that 4,300 rally and took us down to lower lows, down below 3,600. So, a little bit of crabbiness from Jerome Powell and maybe another month of data that is disappointing, and it can flip the other way. So, yeah. No, I am of the mindset to say seasonality is moving in a better direction. Inflation's calming. The economy is not going to be in a deep recession, maybe normal or mild, and prices are really attractive. But I'm having plenty of work to do just with repositioning portfolios and making sure we've held up on the downside. We want to also outperform or perform nicely on the upside when we're there.
And you're not like that kid from the Life cereal commercials. You don't hate everything.
No.
When I drive here to my beloved CNBC, we have potholes in New Jersey that if a giraffe fell in them, they'd need a ladder to climb out. And I only bring that out because at some point, with all the money being thrown in infrastructure, a name like a Vulcan Materials, which, literally helps make roads with asphalt and composites, is a name that you like. There's going to be a lot of money thrown at these types of projects over the next decade.
Yeah, it's just a great management team, and they had some issues in Mexico in a certain situation they've been very transparent about. There's a reason why it's been a little weaker, and has provided a very nice opportunity with a mid-teens multiple, a mid-teens growth rate that will benefit not only from infrastructure, but re-onshoring. And we just find a number of stocks and a number of industries like that, high-quality growth that, is cheap and provides good for the pickings.